The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Bank of Canada here, if you're looking on the YouTube side, is forecasting a drop in GDP to finish off 2026. We're kind of humming along in the not so good territory, but we're not dying. We're just bleeding out slowly.
Still a lot of uncertainty, which it'd be nice that we weren't in an uncertain time, depending on what's going to be happening with tariffs. What's going to happen? Are we going to make any more deals? We know that the Kuzma one, until some of this stuff is set up, we just don't know where the economy is going to go exactly. And that's why we got to take it day by day and month by month.
The International Monetary Fund, or IMF, says that Canada is one of the world's most open economies, of course, because we have full of resources, yet its internal market remains fragmented. Not trading with other countries, it's trading with each other. And we've long talked about this. We have so much interprovincial barriers. It's easier to trade down south than with each other. And it only came to light because of trade tensions with US. Alex Pang here alongside my partner in crime, Alex Shanks. Alex, how are you doing?
I'm doing pretty good here tonight, Alex. There's no football. There's nothing going on that way. So it's been kind of a boring week after such an epic time at the NFC Championship. It's kind of almost like it's coming off of a high. There's no football game to cheer for this weekend. But we will have the Super Bowl coming here soon.
Yeah, same for me. I've shifted my podcast listening to all Seattle sports, a couple Seahawks bloggers podcasts and another radio show. I've been kind of flip-flopping back and forth and listening to my daily Seahawks talk every day. I've fully kind of tuned out of the Canucks. The Canucks are last in the league right now. I know the Leafs are kind of struggling, but has it been that point for you too with the Leafs?
Oh yeah, it's and it normally is at this time, when football's on, and this is more, if my wife ever listens, I can't watch hockey and football. I have to choose something, or I would just have no time. So I just say, hey, no more hockey until football's over. And so, I check in on them, but it's, I think they have to win the next 15 games to even have a chance for the playoffs. And so it doesn't look good that way.
Okay. So I guess for both of our teams, it's kind of the death march for the end of the year. They're not going to make the playoffs. And now, for us hockey fans here, there's this website called Tankathon where we do the randomized the draft simulator to see where your team is going to finish. So as a Canucks fan, we're last in the league right now, but knowing our luck, we'll probably drop to second, third, or fourth or something like that. But yeah, the team.
At least you guys kind of are in a rebuild. You guys for a bit we're oh, we don't even need to rebuild. We're super good. And that only lasted for a year. The Leafs should be kind of in their prime right now. It is it's a messy situation. We won't make you listeners listen to me mope about the Leafs.
Yeah, we've talked enough about the Seahawks last week, so we'll jump right into the program here. So, leading off here, no surprise here. Bank of Canada maintains a key interest rate at 2.25%, and just a reminder, it's not what you're borrowing; it's what the bank lends to other banks. So, prime stays at 4.45. Basically, the key sentiment they're saying is, Kuzma negotiations are looming. And based on the current economic climate, we're just going to keep things as is. No surprise to nobody.
Yeah, no, it's pretty funny. There's some people that I was surprised, it's even on social media, which again, it's just, I think people do it for clickbait. They're oh my God, there was no rate cut. It should have happened. It's man, the data's been there for quite a long time. But don't even remember, Alex, me and you we did the golf tournament in May, and they didn't cut rates. And there was a bunch of realtors there. I never saying, hey, realtors, they don't listen to the economy as much as us, but they were so shocked there was no rate cut. And it was man, the data was there for 2 months that this wasn't going to happen. This wasn't something that just came out of the blue. It was like the data showed that we were not going to have a rate cut, and that's what this one was showing. There was no chance of it.
Yeah, I mean, realtors, they want to sell homes. They want to, they want action to happen, and anything that will help action, like making it easier for people to borrow money, helps that. So, we're more data driven. I mean, obviously, we like our rates to to go down to get more business, but if the data doesn't support it based on how the economy's tracking, and we're honestly almost housing market commentators, to be honest.
Yeah.
If all the data is pointing towards them holding, then we kind of have to keep it real and be a finger on the pulse.
Yeah, and I mean, I personally believe like we're like we're gonna talk about it more, but like I think we are in a neutral zone. I think where we're at personally is a nice spot. Maybe could it be a tiny bit lower? Maybe could it be a tiny bit higher? Like this is where people it is the most affordable based on qualifying than it's been in years. And to me, if we had rates going lower from what we've always talked about, that means it's bad for the economy. Anything lower than this, going past the neutral zone for the Bank of Canada, that's not a good thing. That's fully to stimulate the economy. And then that means there's obviously more people losing jobs. And that is like, we don't know what's going to happen. There's a good chance that people are still going to keep losing their jobs, which then, hey, that might change stuff. But it doesn't mean that rates are going to stay low for a very long time. I will quote that right now. If rates went down, it's not going to be for a very long time.
Yeah, 100%. I mean, the forward guidance too is most of us in the industry believe that the next move in March, probably uh no cut anywhere. It's probably going to stay the same in March as well. Who knows afterwards? And the next few things we're going to talk about could kind of lead you into what the next direction is here. I mean, Bank of Canada here, if you're looking on the YouTube side, is forecasting a drop in GDP to finish off 2026. As you see here, um, I mean, the net exports kind of dropped off the map here in 2025. The GDP is the growth here is kind of muted and tailing off in a not so good direction, ending in 2026. So it kind of leads you to believe that even the Bank of Canada knows that we're kind of humming along in the not so good territory, but we're not dying. We're just bleeding out slowly.
Yeah. It's there's again there's still a lot of uncertainty, which it'd be nice that we weren't in an uncertain time. But again, like depending on what's going to be happening with tariffs, what's going to happen, are we going to make any more deals? We know that the Kuzma one, like until some of this stuff is set up, like we just don't know where the economy is going to go exactly, and that's why we got to take it day by day and month by month.
Yeah, absolutely. I'm going to take this next part here. So you remember when I said last year, or actually earlier this year, end of last year, that you think we're kind of in the perfect spot, that you think rates are not going to go down, it might even go up, and I'm like, I'm not so sure, Alex. I think there is room for things to go down a little bit more. And so
Yeah.
here is my supporting argument. So it looks like the BC Bank of Canada is seeing deflation part now that I saw. I'm not saying I'm some genius or anything. Um, they're saying that CPI inflation is expected to ease temporarily below 2% before settling on the new target. So if you see this graph here, in the blue is kind of the neutral range. Um, uh, or it's kind of in the range where the bank kind of sees where they're comfortable with, in the 2% range. We've said before, is 3% the new 2%? Are they going to be okay with 3%? It seems like it's hovering in the 2% range now, and it'll settle throughout 2026, which kind of leads me into the next bit. So Tiff Macklem said today that there's more factors than usual that could deter Canada from achieving the bank's economic forecasts. Now, we all know those geopolitical risks. Donald Trump threatening Greenland, removal of Venezuela's leader, and, of course, now that his advisors told him about the Canada-China deal, that's actually not good for the U.S. He's like, threatening Canada to impose more tariffs, i.e. the 100% tariffs that if we were to follow through on that deal with China. And so Tim Macklem is quoted saying, "We're feeling like there are more things that could go wrong around that forecast. That forecast is more vulnerable based on one of those three things I cited above." So now economists are interpreting these comments as, tilting toward the need for stimulating growth. And what does that mean? Maybe a cut to stimulate the economy. So that's where I kind of land on, could be a quarter. A half might be a little much, but I would say maybe a quarter by the spring, summer. But based on it seems like Tiff is acknowledging that that might be the case, but not committing to it. Like, what do you think about that?
Why don't we do this? I mean, I know we had Matt Beckett, the financial advisor. I think I think you still owe him a lunch. Let's do a lunch bet for me and you. We know that we'll see each other sooner, and let's say I don't think even I'm going to say if there's going to be a cut, it's not going to be in fall. I'll say that. I do think if there was a cut in springtime, it means rates will increase in 2027. But again, let's not even talk about that. That's too many ifs, ands, or buts. I'm going to say that I do not believe there would be a cut in the spring, and I'll bet you some sushi or pho on it.
Okay, so we both agree that March is probably going to be a hold. When's the next cut? When's the next announcement after that? Do you have the schedule coming up here?
I'll get it right now.
So usually the announcements are every 6 weeks, right? So if it's beginning of March, then we're probably looking at end of April, and then after that, beginning of June.
April 29th would be the next one.
And then when's the next one after that?
June 10th.
Okay. And then after that would be July or August?
July 15th, and then because it goes like in a bits of bursts, like the next month, and then it's on July 15th, September 2nd, October 28th, and December 9th.
Okay.
I'd put maybe September. That's like that would be if there's any. Now again, tomorrow, if something changed in the economy, this conversation completely be changing.
Yeah. So I'm just going to put my neck out there, and based on this, and I feel like Tiff is kind of prefacing us and just getting us ready if all of these things that we talk about with the geopolitical stuff happening. I'm going to call a quarter point cut either in the June or July announcement. So that's probably going to be another, 3-4 months away, but enough of things. The storm is kind of brewing. It seems like it's one of those points where right now we're on an island. We see that the weather is clear, but the shaman says, "Oh, there's a storm brewing," and everyone on the island's like, "What are you talking about? The skies are clear." The next moment, the storms are brewing and it's a hurricane. I feel like that might be the case where all signs are not pointing toward anything, but I'd say a cut in June or July. One cut.
Yeah, I mean, there's like it could be again, like if the Kuzma deal and it right now everything's going sideways. I mean, Trump is saying that he's going to put 100% tariffs on us. And again, the hardest thing with that is like, well, inflation as tariffs come in, like there's not a clear path today. And so yeah, I would say if there was going to be a cut, it's going to be September. And so I would say it's if they have a cut in July, I owe you dinner.
But we both agree that it might be more likely a cut than a hike, right? The first move.
Oh yeah, I do. I'll definitely agree that there's no rate hike happening this year. Like that is like I'd be putting money on that.
Okay. All right. Sounds good. That's a bet then. So,
Yeah.
if it happens first in June or July, then you owe me a dinner.
Yeah, exactly. And then so then I guess if it doesn't happen at that time, then you owe me a dinner. I don't like. Do I have to be right on the September or October, or is it just, hey, if it doesn't happen in July, where do I win? I guess.
Let's say if it doesn't happen June or July, then I owe you dinner.
Nice. Sounds good. Well, we'll make it. We'll turn it into it's a business expense for the podcast. I mean, this is another one which is there's still news going around. And so this is for OSFI, the this is how I just like to say it, is OSFI. It's just the easiest way for me to say it. Has left Canada's mortgage stress test unchanged. I don't believe that they're going to change it. Our government is very, very bad at like making a change and then adjusting from it. They're just kind of stuck in their way. Kind of like some stubborn boomers sometimes. They're like, no, I said this, I'm sticking with it. Even if I know that this is not the right thing, I'm not moving from it. But they have confirmed that they are still doing the LIT, the loan to income limits for uninsured mortgage. Now, what's actually happening on this is directly at the banks and the financial institutions. It's not happening like me and Alex when we do like a qualifying for someone. That's not how we're qualifying, but the banks have to bucket it that way, and they're not going to lend the same amount of money to someone that is going above this LTI if they have a bad credit score, they don't have any investments. And so right now it's more at the institutional level. It's not something that actually affects us today on the qualifying side of things when we're doing a mortgage application.
Yeah, I mean, I can see it from our end that they're they're wanting to have it more of a spread risk kind of thing. And I could see it from our end being like we might not get as many uh debt ratio exceptions where we're able to for anybody. It's more like
Yeah.
we will do it only if they have good asset, great credit, higher like positive net worth, those kind of things.
It
um
just has to be in the right bucket for them.
yeah, I mean, although we wanted the stress test to disappear or change to 1%, I mean, I kind of knew it in the back of my mind that it probably won't happen because if you remove the stress test or you make it less punitive, like instead of a +2 plus one, it's a +1, it's seen as a stimulating thing, which means you like then if this were to happen, then rates probably would have dropped already. Like, like this is seen as a stimulating change
Yeah.
kind of thing. So
Maybe they could do something of like first time home buyers. Maybe they don't have the stress test, but hey, if you own an extra property, hey, you have to have it. Like, to me, like, we could start trying other things than like just doing one thing, trying to hit a hammer on something and it's not working. Like, we're not trying new options. And I feel like we do need to try some new things.
you know, going on that analogy, Osafi wants to keep doing that hammer. So they already spent a year on this consultation. They want to spend another 6 months to make sure that the decision they're making is right. So
Yeah.
that's government to you. That's like, hey, we spent, millions of dollars in this, but we need another report, another 6 months to figure out if the first year we did is gonna be right. So I'm like,
And like, to be honest,
okay.
they probably should have waited until 2026 to really start it, because like this is when all the lower rates people's are coming up for renewal and everything. Like, this is probably the better year to actually test it and be like, hey, for one, are people moving the mortgages, or hey, are they just renewing directly? Because like that would be a cool thing to test actually on a data side, is like, for one, are people renewing directly with their lender because hey, they're offering a good rate? Or is it like, hey, they just can't move, they can't go anywhere else? On my side, like in the last week, I've helped a lot of people. It just makes no sense for them to move a lender. We were able to send them a letter, get their actual lender to come down a little bit, and just like the cost savings for us to go and get all these documents, we're talking like $100 over 3 years. And I mean, I just don't think it's worth it to spend someone's good or hard time to save $100. But other people, they just can't move, even if they wanted to. They don't qualify anymore, and that's where I think some of this stuff should have been tested during this time, which they are now going to be doing.
Yeah, I mean, one of these things about LTI limits that other countries have done, the UK has moved away from the stress test and are doing
Yep.
more LTI limits. So maybe Canada is kind of looking at UK, and I guess like maybe this extra 6 month of consultation, they're going to probably see what's happening in other countries and to see if it works out that way. So just like any regulation or whatever change, it's it's slow like molasses, and it's like moving a cruise ship.
Yeah. And that's, I mean, sometimes I feel like it just needs to happen faster.
Well, we all know with regulatory bodies and bureaucracy, it ain't fast. It takes forever, and consultation after consultation. we determined this, and let's have another consultation to make sure our first consultation's right. Oh, all this too much oversight. So we move on here. The International Monetary Fund, or IMF, says that Canada is one of the world's most open economies. Of course, because we have full of resources, full of stuff. Yet its internal market remains fragmented, not trading with other countries. It's trading with each other. And we've long talked about this. We have so much interprovincial barriers. Like it's easier to trade down south than with each other. And it only came to light because of trade tensions with US. Like, why is trading with you know, with each other so difficult? So if you see this graph here, and they even said that if we knock down internal trade barriers, it could boost our output by 7%, like our GDP by 7%. And it's delivering gains worth roughly $210 billion. So
Yeah, that's a fair chunk of money here.
yeah, exactly. So I mean, I mean, if you look here at PEI, I mean, like, what does PEI like? Is there much happening in PEI, like other than
Well, they're
like?
just the fishing industry.
Okay, so I guess they can only. I guess
They're
they just
probably only
only.
selling it to the US or to the Asia markets. They're not
Or
selling it
to
to
themselves.
anyone here.
Okay. Yeah, so it looks like all these like Maritimes or Atlantic provinces, if we just trade with each other or just, we'll be doing fine. I guess less so in BC and Ontario because I guess we are the largest provinces. We have we already trade internationally, Alberta as well. But it's basically like, why are we tripping over ourselves? Like, we need to reduce the barriers in that. Again, we talk about it.
Especially like internally, like in Canada,
Yeah.
like, hey, maybe make it a bit harder to go somewhere else. But yeah, why make it harder to do it inside of Canada?
Yeah, like reduce the red tape when it comes to development. Uh,
Yep.
I think it was probably a couple months ago now. Like, I think Ontario and BC or some of the province were like trying to remove the barriers, being able to get liquor from Ontario, like some of the wineries out back east. Out here, like we just heard about it. Who cares about these MOUs? Let's actually do something. We'll when we see results, talk is cheap. You know, let's do something about it.
Now this is an interesting one, and I feel like me and you, Alex, will have some stuff to talk about it. Me and my wife were actually talking about this last night because she told me. And it's Canada will now require its refugees and asylum seekers to actually co-pay for the healthcare starting in May. Now, they will have to pay 30% of the cost of services such as dental, optometry, and physiotherapy at a $4 flat rate on each prescription. Now, this is where I have like, hey, yes, maybe do they need to pay for some of this? But again, it's like, well, how about this? Why don't we stop sending money elsewhere to other countries? And hey, why don't we use it here and be like, hey, you know what? You come to our country because for one, you're fleeing a war torn country. Hey, we're gonna help you. Like on here, we are spending 885 million on healthcare. So hey, that's a lot of money, but this is where I would rather see that money going to actually helping these people that need this help.
Yeah, I mean, I see some people on protectionists comment on social like they should pay for it all. Like that's good that they're starting to pay for it now, and maybe the Ottawa is finally realizing like where is our money going? We're bleeding, and not to say that like the rotten apples paint a bad picture for the many, but like all these crimes that we're seeing, like these targeted hits, especially in our area, like especially in Surrey, um, they're all from like refugees or illegal immigrants or whatever. And not to say everyone's like that, but we need to divert the necessary funds to the proper people. And we've talked about it till the cows come home. Why are we sending so much foreign aid? Let's spend more back home. And yes, if we are going to welcome migrants and refugees, directed towards this, but you know, I don't know. I'm kind of neutral on this. Maybe on the side. I'm like, good. They may. It's good. They need to start paying. Like, whereas, some people like a lot of locals or um, people who live in this country, they don't get any help from healthcare. So
Yeah, that's where again, that's just where to me it's like I can see it like, hey, obviously, and if some of them are abusing the system, but for again, I would rather see money taken elsewhere that's going out of our country, going somewhere that we don't really know what's happening for. Where is the care going? Where hey, this could actually go here. For one, it's going to boost our like hopefully go back into our medical system. And so it's yeah, I mean, we'll see what happens with it. And I mean, these costs are pretty low, like it's nothing crazy. And so, hey, yes, it will. But obviously, depending on how these some of these people may not even be able to work right now. Now, I do know, and the tinfoil hat I've never seen what people actually make like when they come into Canada. But I know that there's many posts around saying that some of them are making like 5,000-6,000 bucks a month, and that's just for them not working. That's just what the government pays them. That's where it's like, hey, there's people that are like working their butt off to try and make like 3,000 bucks a month, and that's where again it gets sad for us as Canadians.
yeah, I'd like to see, I'd like us to have a balance, like us welcoming and helping other nations with, refugees, asylum seekers. Yes, that's kind of part of our fabric of Canada to help to serve others in the world. But we need to have a cap on that. Like it's not let's let 4 million people into this country. That's immigration included, but like we should have limits on those. We'll help people up to a certain. It's almost like, you know, you'll help certain causes, but you got to take care of your own house first. Like we'll help up to a certain point. Like we'll we'll help allow, I'm just going to give an abstract number, up to 100,000 uh, for this, and then that way we'll cap it. And then of the 100,000, maybe we need to be better at figuring out like, are these refugee and asylum claims legit, or are you fleeing from non war torn countries and just as a way to get in for free,
Yeah,
you know,
yeah.
kind of thing. So, I mean, we shift gears here. Um, there's been news of more job layoffs. Um, Now, GM in Oshawa is laying off up to 1,200 workers on Friday, and we've long
Yep.
talked about the auto industry is kind of dying. It's kind of on a downward trajectory in Canada here. The union leader says that he hopes the premiers encourage the feds to pursue, like, relentlessly pursue a CUSMA renewal. Now,
Yeah.
I'm not too familiar with CUSMA. Alex, maybe do you want to enlighten the users, the
I mean,
followers?
I mean, no, I don't know enough about it myself there, Alex. I just know that there's agreements for free trade and everything of like, hey, yes, this is what we're allowed to like give some tariffs. Like that's always been, and like, hey, a lot of that stuff never used to happen. And so Kuzma was the new one that was meant to come in. And I mean, right now Trump is saying it's going to get torn up. Um, Obviously it allows like for the vehicle industry like meant to be shipping down to the US and not paying cost on it. But right now there's tariffs on that. And again, we obviously know like Canada has made a deal with China to start bringing EVs in. And this is just where it's like, well, again, yes, even if this wasn't going on in the US, well, it's going to get hard for the car industry if these prices from China start coming over. People like we all like to say that we want to buy local, like everyone wants to say that, but when like the price tag hits a certain point, it's I mean, I know I do it, Alex. I'm like, hey, I would love to buy this at the store, but hey, I can buy it for Amazon for $5 compared to 100. I'm gonna buy it from Amazon. And so that's what people are gonna start feel with these vehicles. They're gonna say, why would I buy this electric vehicle or any vehicle for 100,000 where I can buy this EV for 30,000? And so yeah, I feel for the people that are in the like the manufacturing industry. I like we talked about before. I would hope that Canada focuses on trying to be like, let's bring manufacturing to Canada. And I mean, their manufacturing plants are way more sophisticated than ours. Like they're like just the way that they do stuff, their process. And hey, help teach some of that stuff here in Canada.
Absolutely. And I mean, I've long said it before where, yes, the whole Trump thing, support Canada, people will do it until it hits their pocketbook. Then,
Yeah.
then that's when people go to the States to, shop for Trader Joe's. And for me, sometimes, buying stuff and going to Blaine picking up because it's free like shipping to States. versus
Yeah.
$20 to ship to Canada. And I'm like, man, I'm 20 minutes from the border. I'll just go
Yeah.
do what I do. And
Totally.
honestly, when I talk to the people of Bling, which is like a border town here in this side, um, they don't like their president either. So I'm like, our
Yeah.
issue is not to work with you guys. We love you guys because
No.
before the president, we treat you guys as neighbors all the time. It's like, yeah, it's just it is what it is, and their businesses have been suffering because of it.
Yeah.
But you know what? Just because we talked about layoffs, there's actually good news on the horizon. Alex, you want to talk about that?
Yeah, I mean, we got this one. Ottawa and Seoul signed an MOU. There's a lot of MOUs just floating around. The MOU, the MOU, the MOU.
Yeah.
I feel like that's going to be the new slogan now in Canada. MOU, to bring South Korean auto manufacturing to Canada, which would mean more Hyundai's and Kias. And I mean, we've had a Hyundai and I've had Kia. I know, like back in the day, like like they maybe looked okay, but they would break down quite frequently. Ours have all been really good. Like they're, yes, you can see some spots are like less like maybe upkept as like maybe a Ford or a GM, but like to me they're building really good vehicles. And again, it's at a better price point than buying like a GM Suburban is 100K, where you can buy like a Kia for 60K.
Yeah, I mean, if you were given a choice now, I've heard like Hyundais and Kias are not the greatest quality. It's almost like a tier. Now, correct me if I'm wrong. I'm a car guy, but not like super car guy. I would say the the reliability tier would be the Japanese, like the Hondas and Toyotas, and I'm sure there's other, like it goes down from there. There's like the Nissans, the Mazdas, and stuff like that. Now, I guess the lowest of the lows would be the domestics in terms of the reliability, like the GMs, the Fords, the Dodges, and stuff like that. And then would you put the Hyundais and Kias in between the Japanese and the domestics?
No, I don't. That's
Like
what I
where
mean. I don't
it's
really know. I
I don't
mean,
know.
like, it's, yeah, it's hard to tell. I mean, again, like I'm not a car person. I mean, I've always liked Ford. It's like what I've had for other things as trucks and everything. And hey, my truck's 8 years old. It's been pretty good. And so I mean, I wouldn't know. And I mean, that's where to me, I'm not going to go buy like a Toyota at the price tag. Yes, maybe they have a little bit better value. I'm probably going to go buy a Kia. Like that's the difference for me. But I've never really had a vehicle break down on me like that. So like it would be different if I had bought a Kia before and like, hey, the engine blew up on me in a year one. I'm gonna be like, screw this, I'm never buying one of these again.
Yeah, I was looking at cars at a time, and one of the Kias are really nice looking are the Kia Stingers. So they're like sports sedans with like I think like V6 turbo or something. And I ultimately decided against it and went with another car because of the whole reliability thing. It's like, oh, it's a nice car, but oh man, it's a Kia. Like, like reliability is maybe like a 6 or 7 out of 10, whereas the other cars are like, you want the 8, 9s and stuff like that. But at the end of the day, they're still beautiful cars. So I mean, maybe they're coming a long way, and
Yep.
maybe the fact that there's this MOU, that's our favorite word, could lead to improvement in their manufacturing and such. But I mean, here locally, more, like we've had all this talk about job layoffs, and you know what, the economy's crap, and more layoffs are happening across all industries. Here's another local one. This is actually more positive news here. Um, I'm a gamer. Are you a gamer?
Yeah, I mean, I don't get to play as much as anything I used to. Like I said, right now I'm playing some Minecraft with my son. And it's but that's about it for video games for me right now.
Okay, so the big gamer here out in the on the West Coast, Electronic Arts, the makers of
Yeah, yep,
NFL, NHL, Madden, UFC, and FIFA.
yeah,
They have a huge campus in Burnaby. They are currently hiring for a bunch of high-paying jobs. Now, some of these here for an associate producer up to 152,800. Now, if you are an experienced worker, could be up to 167,000, and then software engineers up to 116,000. So I would say the gaming industry is almost hand in hand with software and the tech, right? Would you say it's very similar
I think
to
so. Yeah, I mean, some of the software is a little bit higher, obviously, but it's still like I think it's been there. And I mean, now obviously on here, like I just don't think the like AI has been able to take over as much as like I think they thought in there, which again it could change, but like that's where like to do these games, like you need real people that are testing them and playing them right now. And so I mean it's great to see that. And I hope that keeps going. And again, I hope that we don't just have computers making our games, because I mean they're probably not going to be that fun.
Yeah, and like I sure hope these are kind of like permanent jobs. It's not like, especially in the industry, like I have friends who are in the gaming industry, and it's not like they'll hire you for a project or for a game or two, chew you up and spit you out, and oh, they lay you off right after. And
Yeah. And I
you know,
mean, I feel like that's how most of it is. Like I find like most get like most games and the like companies, they have a company for each game and everything. And that's like if you're lucky enough, you get to move to the next one. Or it's like, hey, you did one and now you got to go somewhere else.
Yeah, that's very much like the software industry too. Like you're
Yeah.
really hired, you make a lot, but in a short 1 or 2 year span, then you're laid off, and then you gotta move off into the other thing. And then yeah, I've talked to some clients who are also in the tech as well. They make a lot of money, but they say that that's actually pretty standard in the industry, and it's kind of like they know what they signed up for. Like you're gonna make a lot of money in a short period of time, but you might be laid off, and you might take you a while to find another job, or depending on where you are in the cycle, you might be able to find another job right away, or you might be you know unemployed for 6 months to a year or something like that.
Yeah. Now, I want this is not it's not on the docket there, Alex, but I want to actually add this because it's something that I read here today that's interesting. This is Canada going into the US because we're going to jump into them. Obviously, like as companies, like when you're starting a new company, maybe you're making a new software, you need like VC backing, you need venture capitalism to actually get the money. Well, what's actually happening is most places, like some of them, and I mean we have Spotify that started here in Canada, but a lot of places that can't get the funding here in Canada, and a lot of these venture capitalists are actually making these companies incorporate into the US. They will not give funding to them unless they actually are incorporated in the US, which I mean is kind of like holy shit. For one, that's just it's brain drain on our economy, taking all these good people and these businesses. And that's where seeing them like this is why we probably don't have many like big tech companies. Because for one, yes, it's obviously a better business plan in the US just for strategy, but it's also some companies that are probably making like, hey, you have to be over here. And it's I mean it's kind of sad to hear that.
Yeah, I feel like we just have it's a symptom of we just have too much red tape. I think you mentioned Spotify. You probably mean Shopify, right?
Shopify, Shopify, yes.
Yeah, I'm
Yeah,
like
we're
Spotify. I think that's yeah, but I think you mean Shopify.
Shopify.
But yeah, like that's that's kind of a symptom of like yeah, the reason being it's they want the headquarters in the States because maybe labor's cheaper and affordability, and they've done research that um, workers want to live in cheaper places and they're likely to stay longer because of those things. So
And then I saw another one, similar thing. And this is like in Canada to get like your work permit, get your PR, like you have to have a salary job. And so a lot of these people like that might be like tech people, hey, they've come up with business ideas for them to, if they want to stay in Canada and grow a business, they can't do it. Like they're either they have to just go get a normal job. They can't start like their own business because they have to have steady employment. And again, like that maybe makes sense to be like, hey, like don't just come in Canada and not get a job, but like, hey, what if people are coming here and like they're really smart? They can start a new business. Maybe they can make a thorium reactor. We'll stop using nuclear, but we're actually forcing them to dumb themselves down and just keep a normal job, or they're just going to the US and they're starting these tech companies.
are they able to go into the States and do the same thing, start a business and be
With
able to?
money, with money, obviously, like, and this is where, like, this one I saw, it's I can't even remember the company. They're like, they're worth like millions of dollars now. They started in Canada and they're like, well, we can't do this. We're not allowed to do it here. We would either get deported or we wouldn't get our PR. And so, I mean, they had the financing backing to go to the US. And now they have a multi-million dollar company.
Yeah, yeah, that's just sad. We need to encourage entrepreneurs um, building in Canada for sure. So we shift gears here. in the US here. Now, in the US, home builders are now selling new homes at 5 to 10% below resale market prices. Now,
Yep.
you'll never see this in Canada because Canadian builders, can't do this because they need to sell it at 10 to 15% over the resale market because their cost of building is so high with development costs, land costs, and everything. You know, especially in the States, it's a free market with minimal restrictions. Whereas in Canada,
Yeah.
we are up to the eyeballs in red tape. And like,
Yeah.
it's not really a free market. Like, when things get too hot, the government intervenes. When things get too cold, the government intervenes. They just want to keep it kind of like this. Whereas in the US, you might see wilder swings and, maybe the bottom
Yeah.
dropping out. But yeah, it's just one of those sucky things there.
Yeah. Yeah. I mean, this is the only good thing that we can say as a for Trump, as he said that he proposes to cap credit card interest to 10% for 1 year. So I mean, hey, good on for saying that. Again, he can say whatever he wants. Does not mean it. I mean, I think this would be a great thing. Like, hey, you guys are still making profit upon profit. Hey, you know what? For the next 5 years, we're going to put a freeze on it. You guys aren't going to make 50% profit anymore. You're only going to make 25%. But like, what that could actually do for economies as a whole, it would probably be insane. Do I think it's going to happen? No. But I do think it would actually help people potentially get out of debt quicker. And we know in Canada here, there's a lot of consumer debt. We're not even talking about mortgage debt. The consumer debt is insane, and people just they don't even really realize how much they're paying in interest. And so, like, I'm just going to do a quick calculation for people here. Let's say if you had $20,000 owing on your credit card, what you have to pay in interest, if you're paying your 20%, you have to pay minimum, just the minimum that goes to interest is $333. If you do not pay anything else than that, that's your minimum you have to make. That's just paying interest. It is just paying that. You're not decreasing your debt, and you're just going to keep paying that. And many people would do that for years. And so let's take $333 and let's just time it by 3 years. That's $12,000 just gone. Like, it's money that it never did anything, and you still owe $20,000 in debt. And that's where, hey, obviously, if it dropped down to say 10%, let's say 20,000, that way, you're then only paying $2,000, which, hey, over that is then only $166. And so, I mean, it's something that could be beneficial. Do I think it's how it can happen? No.
I wonder why he's only saying just for 1 year. Why not be forever? Why can't it be
Yeah.
or for 5 years? Like, why just the 1 year? Like, it's not like it sounds great,
He's trying to
but
appease, he's trying to appease people.
yeah, I mean, like, I'd rather be like now if you make this a permanent thing, that'd be amazing. Like or a 5 year thing or something that something in 1 year is like it's like one of those promotional rates. Like if you transfer your balance transfer over to this credit card, you only pay 0.99% interest,
Yeah.
but you have to they charge you 1.5% to move the balance over. So really, it's like it's 2.5% or something like that, right? So, I mean, it sounds great. I don't think the credit card companies would allow it, or they would hate it. And of course, there'd be crazy lobbying. I would love for that to be Canada, but we know it's not going to happen.
Yeah.
Yeah.
No.
So here's an interesting bit. It involves Canada, but mainly about the US here. Now, Carney was recently at the World Economic Forum in Davos, Switzerland. So he made a speech um, basically saying that the smaller countries shouldn't have to appease the large countries, i.e., the US, to get favor, which basically that's how the current world's economy is operating. Us smaller to medium countries are having to pander to the big boys like the US, to China, to whoever. But he did say we should combine to forge a new path. And he all the leaders gave him a standing ovation. That was
Yep.
great. But just like a scorned girlfriend, or you broke up with the girl, broke up with someone. Trump responds by excluding Carney from his own board of
Yep.
peace. So this analogy I like is like it's as if you broke up with somebody But to save their ego, they say, "No, I broke up with you first."
Yeah.
So like, oh man, this is just one of those funny things I thought I'd mention there.
Yeah, and that's I mean, I listened to the speech. I mean, he was a good speaker. Like I'll give Mark Carney that, but it wasn't like mind blowing to me. As it wasn't like oh my god, like this guy has so many plans. It was just like a speech. He talked about stuff. He was very clear on everything. But I mean, there was just so many posts about it. Like this was the best thing I've ever seen. This is the and so like I just didn't get that. Like I did feel like it was a good speech for someone I find like say if you go back to Justin Trudeau, like his speeches were never clear and concise. Mark Carney is boom, he knows what he's saying, he knows what he's talking about. He's much better at that. But like I don't know if it was like the best speech of all time.
Yeah, it's like it's great that they agree. Are you going to
Yeah.
do something about it? It's like talk is cheap. BS is,
But
what?
I mean,
It's
I
cheap.
do like I mean, it's obviously he's now connected with like China and India. Like, hey, it obviously did something. And so like, hey, I'll give him a pat on the back that way. And hey, like do use what you've gotten from this. And I hope that we can get some more for Canada then.
Yeah, and like let's not ignore the fact that our trading partner with the U is the US because geographically they're the closest and they represent like 75-80% of our trade. So
Yeah.
nothing that we do with other countries in the world is going to replace that US. If anything,
No.
it just puts the pressure off of us to trade with them. Like it's not all of a sudden go from 75-80% with the US down to 20. Like that would be drastic or that would just destroy us. If anything, it might just ease to like, I don't know, 65-70% kind of thing where we're venturing out. Nothing's going to change. I think it would really just help us settle with like, come to agreement with US eventually, either,
Yeah.
soon or what, might have to wait till Trump's out of office.
Yeah. Now this is I didn't see this, but this is an interesting one. And this is Las Vegas trying to get people Canadians come, but there's three hotels in Las Vegas are now accepting the Canadian dollar at equivalent value to the American dollar for select gaming hotel and drink services to attract more Canadians to Vegas. So like and I mean, I've spoken to a lot of people and they're like, I'm not traveling to the US. And I mean, they're like, you went to Seattle. Was it okay there? I'm like, yeah, I mean, it was fine. Like they are our partners. Like they're very close to us. Like there was no riots. There's no one like coming at you with a gun. But I think Vegas is a bit different. It's the older population that does usually go there, and I think a lot of them are saying like, hey, no, I'm not going. And so I'd be interested to know like exactly how they're doing it. Are they just accepting like, hey, if you book from a Canadian website, hey, we're dropping the price to match the American dollar, or hey, do you need to bring like Canadian cash in there? I mean, it's almost saving 30%. Like if you actually look at it, it's almost like a 30% savings.
Oh, I think the dollar isn't it 40% now? Like 1.4. I know
I don't know.
doesn't.
I mean, a minimum 30%.
Yeah, yeah. So I mean, let's be clear on these casino resorts are not on the strip. So it's Circa Resort and Casino, and it's three downtown Vegas hotels, including the D Las Vegas and Golden Gate Hotel and Casino. So they're offering at par deal. Um,
Yeah.
through till August the 31st. So, I mean, if you are a gambler, my goodness, you just go in and gain 40% right away. You can buy your chips and then you can just turn around and cash it and just go home. But yeah,
Yeah.
like I've traveled to Vegas in the past and yeah, I mean, other than our Seattle, going to that for the Seahawks game, yeah, like we haven't made any plans to at least probably like, yeah, my wife said I ain't going to even Hawaii until Trump's gone. So, um, yeah, that's just kind of the way it is. It's almost
That's
like,
and I find that interesting. Like, so, like to me, it doesn't like it doesn't make me not want to try. Like again, we talk about it's Trump. Trump is him. Hawaii, it's not them. They're not the ones that are like doing this to us. And so, like for me, it's not stopping me. Like, hey, I don't really have plans to go to the U.S. But if I would, it's not in my head. It's not stopping me from going.
yeah, yeah. I mean, I think when it comes to the US thing, us Canadians care about it more. I think US, the Americans, they honestly aren't aware of it and they don't give a shit. Like it's not even in their consciousness, to be honest with you.
Yeah. Now, this is a big one, and I mean, especially in the U.S., chemical giant Dow is slashing 45,000 jobs, turning to AI instead. That is 13% of their workforce, and this is where like the job reports in the U.S. is bad. We had like a little bit of an uptick here in Canada, but in the U.S., like it is bad. Now their unemployment is at a lower level than ours, like on a percentage, but again, they have many more people than we do. Um, Now they're saying like this is going to see the profitability jump by like $2 billion. Now, I can see this for them. Like, obviously, hey, like if they're able to use AI, but like, I want to talk about this a little bit, Alex. And I mean, we're running long here, but I want to get your thoughts of, let's say, like all these businesses, like they're going to remove all these workforces. It's all going to be ran by AI. And yes, on paper, their profitability is going to soar because they're not paying all these people. But again, people are not going to have incomes. And let's even say we bring in the UBI, the universal income. It's not going to be very high. People are not going to go buy these things, like the cost of these things. And like, I would love to know, like, have they actually ran those numbers, or is someone just sitting there like, hey, if we can save $2 billion, we're going to make so much more money. Again, for this chemical like company, it could make sense. But a company that is selling things that people need to buy, well, if people don't have the money to go and buy it, even if you cut your cost down, well, now you're not selling the product.
Yeah, no, I get it. It's kind of like biting the hand that feeds you and the dog chasing the tail kind of thing. I mean, like more and more of these companies are trying to be more efficient, turning to AI and reducing staff. That's why we've long talked about, yeah, like, hey, maybe these like might need to go towards trades in order to, say, like almost AI proof jobs, at least for now in this generation,
Till the robots.
uh, to be able to, yeah, to be able to survive. And I mean, like, what do you think? Even in our industry, like real estate and mortgage brokers, there have been always been talk about AI taking over and all that thing. Do you see a day where you and I are put out of business?
I wouldn't say, I would say a large majority of people for sure. Like people that are just like just I had a deal today, Alex, that I got from a realtor. And I mean, as soon as I heard about the deal, I was like, there's this doesn't work. They have a consumer proposal, they have credit issues. This other person has not got back to them in a week and a half. Like, so there's really bad mortgage brokers out there, there's really bad people at the banks. It's going to get easier. AI is going to get better. And hey, if you have like the cookiest cutter deal ever, you're just a teacher and an engineer, you know what your income is, and you just want to buy your first house. And maybe because the banks have got to done with AI, hey, they can reduce the rate or something. Again, it has to be such a cost difference to make it worth it to be like, hey, I'm going to use a computer over a real person. Right now, it's not worth it. You would rather have that connection with a real person. But again, we talked about the when it hits your pocketbook. Hey, if it's $5,000 less, if I use an AI than I talk to a human being, I might start using the robot to do my mortgages. Now that's for a very straightforward cookie cutter deal. When you talk about like emotions of someone buying, hey, you can remove your subjects. Don't worry. Hey, you need to sell your house, buy something else. Hey, we need to take equity. You're a business. We need to increase your income. That stuff's not going away. I think like the easier ones, it's going to get harder for mortgage brokers. And it's going to be the not so good ones that are just going to get eaten up.
Yeah, even I've noticed in other industries too. Like I'm dealing with my cell phone provider, TELUS, regarding roaming charges when we were in Seattle. I end up
Yeah,
getting my bill and they charged me for 3 days versus just one. And I know in history and past, because we crossed over close to
close.
midnight,
Yeah.
so close to midnight, that they ended up charging the next day. Maybe I didn't turn off my roaming soon enough, and boundaries it crosses over and stuff like that. So contacting TELUS, you're talking to an AI, and trying to divert, and as quickly as they got, I'm like, just get me to an agent as soon as possible. So until AI gets really good, I'm finding the service is not great. So yeah, it's one of those things where it will get better, but yeah, in the meantime, like, what, all industries are you know not safe until it does, like with trades and stuff like that. So it just is what it is here. So, you know what? Just want to finish off with this last little bit here locally in BC. Now, four major developers, Polygon Homes, Zenterra, Tianshare, and West Group, wrote an open letter warning that Metro Vancouver's January 1st DCC, which is the development charges, their hike will kill projects, cost jobs, and stall housing. Now, they want it reversed now, have any future hikes frozen, and independent review. What are your thoughts on that?
100%. Like that is like that's such an easy thing. But again, Vancouver, they've been budgeting these hikes in for their actual like fiscal periods. And where else are they going to get the money? Either they have to lay people off or they have to dramatically increase people's property taxes, which wouldn't bode well for them. And so, I mean, I don't think they're going to take this away. They'll probably do a longer freeze like they've talked about and everything. But like I fully think this should be looked at. And again, I want to see the developers proving like, hey, this is where our profit levels are. Hey, because of this hike, it's gone from 15% down to 10%. Again, you have to make money. Everyone is doing a business to make money. Now, if they were like, hey, my profit levels went from 40% down to 30%, hey, you know what? I think a profit level over 30%, you're okay.
Yeah, exactly. I mean, like, if sure, like if you have all these development fee hikes, but if no one's building, 100% of nothing is still nothing. So,
Yeah.
like we talked about before with freezing development charges, it's a good thing. You want to encourage building, and based on the market right now, no one's building even in the current circumstances. So, if you want to kill the industry, you keep hiking it, and it's gonna kill the roost. So, I agree with them, but who knows? Who knows how it'll go? So, our episode's gone a little long, Alex. For this next how many days? 9 days. What are you going to be doing with your life until the Super Bowl?
For football, it's I mean, I'm gonna go skiing this weekend. I have my son turns 7 tomorrow. That's a wild thing to think, having
Happy
7-year-old
birthday.
yeah, that seems wild. And so yeah, we're gonna have a party and everything, and that's just trying to get through the week and get ready for some football.
Awesome. Awesome. Yeah, same thing. Not for much here. I'm actually going to Kelowna next weekend as part of a work conference kind of thing. But I'm going in on the Super Bowl day. So my wife is coming with me, but she didn't want to be all bored when I'm away at the doing the work stuff. So she invited her sister and mom to come along, and they're coming. So now
Yeah.
all of a sudden it's a girls' trip.
Oh, geez.
so
Yeah, I don't even
so
know if you're not even gonna get to watch the Super Bowl, man.
no. Like we're still doing. We already booked a place to go to in Kelowna to watch the Super Bowl day. And but when I'm not doing the work stuff, I'm going to join them. But I'm going to end up being the DD while we go to all the wineries and stuff. And I'm like, oh hey, it's going to be a girls' trip with Alex. I'm like, what in the world? This is supposed to be my thing. And anyways, the girls' trip hijacked my work event. But you know what? It'll be good to hang out anyway. But that'll be
Yeah,
that.
you'll still have a great time.
Yeah, so we will have one more episode before the Super Bowl. So we get to build up the fandom, build up the anxiety. But folks, again, we just want to appreciate for you guys for listening every step of the way. I've talked to some clients early this week. They even mentioned stuff that we talk about in the pod. We're getting more traction. You know, it's been a slow build for us, but we just want to thank all of you along the way. If you like this episode, please like, share, and subscribe. Share it with a family or friend that you know, and help us grow our community. So on behalf of Alex Shanks, I'm Alex Pang. Thanks for tuning in to episode 73 of the Canadian Mortgage Show.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.